Okay, welcome to Sunday group. This is user from Fractal X. We're gonna share charts, compare notes, recap the week, and see what's happening coming up. There was some questions about what happened on Friday with, we were talking about there was going to be a floor test and then, we ended up going up. So how did we know when we changed directions? So I was taking notes Friday afternoon after close to kind of show just, not spend a lot of time on it unless you guys have questions, but to just show what was going on in the morning with the OMM levels and the charts and where you can see when that shift occurs. The more you look at it and the more times you do it, the better you get at spotting it. It's still hard to spot, but when it happens, of course, in hindsight, we can look back and say, oh, it's so obvious. But that's what we're going to do first. And then we'll build charts. And if anybody has any questions, just open your mic and ask, because I can barely keep up with the chat and stuff too. VM, your server muted. I'm going to unserver mute you. Your mic's open. And let's see. Okay. So let's start. Everybody who comes to these knows I always pull out the milk chart first. That's like the first big thing we look at on a recap. So, because he's got everything on here from fractals, order flow, and, of course, just a chart, and then also the vector. So this was pre-market, reminding the yellow box, minding the vector, little test there, test. We got up into this, by open, we were getting up into the buyer's objective, which is where he had marked off. The overnight ceiling was over here, this whole zone. And the floor, we couldn't even see, the overnight floor. So under first print, we got a new floor, new ceiling, and then we tanked off the open. And then down here, when we caught the short average and actually came back up, that's where like everyone was like, well, is this a pullback or a reversion? Because a lot of times when we bottom out, there'll be a buyback moment where the sellers are closing their positions and it creates a buying frenzy, but then it can continue down. So, nobody knew what was happening. We could only, I guess I could like screenshot this way. Yeah, my screenshots, sorry. So when we look at it this way, we can't see what's unfolding, right? Like this. So there's the open. We're here. Is this going to be a buyback or is this going to be a full-on reversion? Well, we got pretty far back. I mean, it went, from 30 to like 80, like 50 points. But then it turned around and went down again. So, but it only got like halfway down and then it took off and ended up with a bullish, pattern for the rest of the day. So when we got up here, people were like, well, are we going to get the ceiling and turn around? So the few things that we want to check is what was happening at 10 to tell us that we were turning around, what was happening at 11 to tell us we were going back down, and what was happening at roughly 11:30. So we're just going to check all these time points. And then over here, how would we know we're not going into positive exposure? How would we know we're just going to track along the ceiling sideways to the close? And then, of course, another push up. But here is the consolidation. And this is where everybody was getting antsy between 2 o'clock and basically 4 o'clock. Like, what's happening next? What's happening next? Because, like, prime point for a reversion, right? Cap on session. But there was nothing indicating here that we were going to go down. So that's what I wanted to review with you guys. So we'll look at that real quick. So in the morning, we had our OMM showing us me see if I can get this smaller. So over here at, 10 o'clock, we can see that from open to, this is Qs and this is SPY, to about 10 o'clock, the bears were in control in here. Open to about 10 o'clock, bears are in control. I'm going to blow this up really big because by the end of the day, it's long, but in the morning, it's big. So we're seeing this green line on top. That's bears. Green is bears. The bulls were trying, and they crisscrossed here around 10:30. So that's this. There's your 10:30. So now the bulls are in charge. We're going up. And over here, let's QQQ. We're not looking at that right now. We're looking at SPY. So bulls are in charge. We're going up. And then it crosses again. This is an indication of a problem. Well, up here, when we're on the PML, we were trying to cross the PML when the bulls took over. We got across the PML, but we didn't quite go up anymore. There was no more upwards rate of change. There was no more velocity. It was just tracking sideways. It was, I call this like a wobble. And where I see this is on the data warehouse. Let me grab that one for SPY. Like all these notes. So when I start seeing us wobble like this, I want to look at the data warehouse numbers. And this is around 10:30. So we go to 10:30 and the numbers coming out of the data warehouse are reflected in all of these drawings. So I'm just showing you where, we say trust the data, trust these red lines, and trust you're trusting the data that's behind it, right? So at 10:30, our ratio is going from like 0.5 to 0.6, 0.7, 1. It's going up. But then it's not going up by a lot. It's like 1 to 0.98, 15 to 14, 9 to 4. It's just wobbling. That's this wobble that we're seeing here. So it's like it's up, it's down, it's up, it's down, but not by a lot, not by a large increment at all. And then over here, so here we cross the PML, we go down again. So on the milk chart, that's this part. And now we're at roughly 11, we'll say 11:15, 11:30. Go back up. Bear with me, I'm not high tech. So 11:15 to 11:30 is here, and we're starting to come down into the PML again, which tells us what we're either going to bounce off the PML or we're going to go down because price does not want to stay at the PML. And if it does, we're chopping. So we still don't know all of this is about to happen. So at 11:15, we're watching the rate of change is going from like 1.3 to 1.0, 1.3, 1.0, 1.0, drops down to 0.8. So now we're below. Price is below PML. You can look over here and actually see that we dropped from being 74 cents. Let me blow this up so you guys can see it really good. That was 11:15. Whoops, sorry. 11:15. This is your PML. This is your price. We're $1.48 above PML. Then we go below PML. Now we're 222 below PML. This is telling you we're going below PML. If you can watch these numbers, that's going to help you. 0 is at PML. So now we're back at PML, and it's 11:45. But over here, as we're going below PML, these numbers are decreasing. We're going from 1.07 to 1.05 to 0.8, and then it comes back up to 1.09. This is the line in the sand, 11:38. We're stuck at PML, and now we start increasing, and we're going above PML by 74 cents, $2.25, $3. Now we're almost $4 above the PML. This is how you know this is a reversion. This is not a wobble. A wobble is when it was down here going like, we're $1 away, we're 75 cents away, we're, well, this one we were pretty far away. But to this. Oh, wait, what time was that? Trying to be precise here. So right here, we're at PML at 11:43, and then it takes off. So let's look. At 11:43, right about here, not only are we at PML, we're at a side exit on the vector. That's 2 confluences. Now we're over here, and we've got 11:43. We're coming out of the PML above. Confluence, confluence. Over here, 11:43. The bulls have not only taken off, the bears are dropping out. They're not even chasing. Like, it's just falling out. So this is a very strong confluence, and the rate, let's say the rate of change increased from like, 0 to 1 to 2 to 3. Those are huge rate of change. Think of it as velocity or speed, right? On here, you're going to see it as an angle. It's going to be going, straight up. Not straight up, but, like a 45-degree angle. Whereas over here, we're barely moving along, and this angle is like barely moving along. So that's the difference between chop and a true move. So I hope that helps. And then here, once we had it, we stayed expanded off the vector the whole time. The vector had come down to check this low right here. And when the vector does that and it turns around and runs straight back up, that's usually very bullish. That's just something you get from seeing it happen a million times. Like, for example, over here, there's your low. The vector came down to check it, and it didn't quite run up as, aggressively. It went up a little. And this tends to make like a little snow cone cap and run sideways. But this one went up, adjusted, and just kept going up. And we like this pattern. It's like a stair step. It's wonky stairs, but it's more like a cliff. I mean, it's just going up. Whereas like over here, when you see that similar, vector dip pattern, this vector didn't behave that way. It was not a perfect V like that. So when I saw this is like one of my favorite trades, by the way. When I see the vector do this on a 5-minute chart, I get really excited because I'm tuned long. I love going long. And when this happens, it's almost always long. Worst case scenario, it's going to check. The price is going to come back and check the vector and then take off. Or fail and go the other way. But we're pre-positioned for either way. So, in hindsight or however, we can see as it's unfolding that these things are setting up. But when you use your other confluences, especially, the data, and then your OMM, where did that go? Where did my OMM go? I lost my OMM. There it is. So, there was extension here. Not only was it the bulls were in charge, we reached the ceiling margin. So we're in the ceiling margin, and I'll show you how to read that on the data too. And then the bears, like, they laid down. Normally it's a battle. They're trying to come up and tangle, but they didn't. So when the pink line actually joins the red line, that's your like third form of confluence that we're bullish, because now you've got both of these things working together. The bears have to get through both lines to get on top again. So for me, anecdotally speaking, just from seeing it a bunch of times, where I was like over here on Qs, that pink line can still be resistive for whoever's on the bottom. It would be the opposite if we were on a short day. But, pink never got to join red up here at the top. So it was constantly chopping sideways for Qs. But SPY got to go to the ceiling and stay in that ceiling margin where you can see it's equidistant. That's about the $1 margin that, we have for SPY, which ends up being like $10 on ES. So I want to show you what that looks like on here on the data. So let me go pull up the other one. This is, okay, so this is from 11:30. This one's from like 2 o'clock on. So this one ran to 2:45, but So where you can kind of see it is like once we get into the ceiling margin, you can see that like we're $1.50 away, $1.49 away. I'm sorry, $1.50 away. Now we're 75 cents away. $1.50, 75, 75, 75, 75, $1.50. So when I see this number go up, I'm like, well, are we getting closer to the ceiling for positive exposure, or did they revise the ceiling up? And you look over here and you can see they revise the ceiling up. So it's not like we're going to get positive exposure yet because they keep moving the ceiling. So now they move it up, we're 75 cents away. And it just keeps going like that. And that distance stays steady. Even though the price is moving, it's not moving by a lot. And then we go back over here to the rate of change. And what we see is like it's just incrementally, it's maintaining, a little higher, but maintaining, wobbling. We're just wobbling along that ceiling with all these numbers, not really doing a whole lot. Eventually, we got up in the fours when this happened. We went from the difference between puts below and puts above. The difference was like around 2 million the whole time, and it loaded into like 3.5 million, which means more new orders were coming in at 3:21 p.m. And that's a lot. That's significant. But anyways, that's what made the ratio increase there as more orders got piled on. And this looks like this is where we might have gone into positive exposure. But then you look and see they move the ceiling out of the way. So positive exposure, in my experience, it lasts more than 3 minutes, which this is only 3 minutes. So they moved the ceiling from 747.09 to 748.23, more than $1, almost $1.25, and we're still 75 cents away. So we were just chasing this ceiling all afternoon on that. So I hope that helps explain with really bad drawings what was going on and how we had the confluence to not expect a bigger upper move, but not to expect a reversion. There was no coming down from this. The market makers do not want to have the exposure the other way. I think I forgot to pull this. Hold on. I forgot to pull the market maker landscape. Somebody have a runny nose. What time was this? That's a different day. Shoot. I don't know if I can find it. I'm looking for the market maker landscape for Friday afternoon. It's somewhere. My missing piece of the puzzle. Oh, also, here's another example. In the morning, we were following chat, and to be honest, like if you're not sure what's going on, follow the professional chat. That's your other confluence. We posted this at 11:30 in the morning, which is right before all that was happening. We were coiling pivot, coiling pivot, coiling pivot, but the rate of change was just wobbling. So we knew like we were going to break one way or the other. So that was just something that got posted. And then we also had this going on. This one's from 11:15. So the bulls are in control now, and they've got a lot of room left to go. Like even if they only came to here, we still had a lot of room left to go. And that's when you see, coming out of the PML and, just looking at it on the larger time frame instead of just that blown up DMM one. And then let me see. I know everybody was talking about it, and yeah, I posted this. So these are some of the other confluences that we could have looked at. But so the 5-minute vector side exit, then adjusting and rising with price. Obviously here, this is really bright, sorry. Supportive stair steps, when you see stair steps and they're extended off the price like that, the price isn't even coming back to touch the vector. It doesn't even want to test it. It just wants to keep going. We were above the RGI. We marked the RGI for SPY. This is an ES chart, so I just converted it for ES because ES was already moving that morning. So I pulled the RGI for SPY and just did a conversion. The overnight dead zone, when we opened right before open, it was respecting that level. Here we got resistance off the level. Finally, once we broke through, that's another sign that we're going to stay bullish because we're above the RGI or above the overnight dead zone. Once we broke above the previous high of day, that's another Confluence. It was in consolidation during that period of trying to get over the previous high of day. It was multiple attempts, and then it broke through. And the OMM was bullish the whole time. We were above PML the whole time, and those ratios were increasing. So hopefully this helps. On a day that we started out going down, but we could see the turnaround clearly on the OMM. You can see that turnaround here and here. So we're down, now we're going back up. We're down to here. And now see, even though the green was on top, this is important too. If the green's on top, we're bearish, but we're not, it doesn't mean we're going to stay bearish. If you see the bulls climbing at that kind of a rate, not just like squeaking along and trying to catch, that was rising. And that's where you're going to see the ratio change. Where is it? Yeah, right. I'm sorry. It was this one. Sorry, that was QQQ. They were pretty much in sync. But yeah, so the bears are in control. But then the bulls just really almost went straight up here and went from here to here. So, we look at the PML crossover, but we're also looking at this. Let me go back to where that happened. So probably about 9:30, 10 o'clock. I'll do this all day until you guys say you get it, because I live by this OMM stuff during the day, intraday. We get all the charts ready at night or the day before that morning, but when we're in the market, that we want to go with the flow. You don't want to fight the market. The trend is your friend, right? So that was like 10 o'clock. Here we were negative, and then it went positive, and it's still negative because the bears were still in control, but you can see that changing pretty quickly into a positive. So it went from 0.8 to 0.5. Oh no, that was still low. What time is this? 10:30. And then 7, 1, 1:15, 1:04, 1:04. That was probably, I think that was the first or second attempt. Yeah, that was just the first attempt, and they tried to do it. But anyways, I just really like doing it that way. Could you explain what you would have liked to see in the numbers to see positive exposure Friday? Well, one thing is if you're going to get positive exposure, anecdotally, they happen on Fridays. It would be interesting to go back and see if that happened on Fridays. There's a picture that I have that I wanted to show you guys where we never break the ceiling or the floor until we actually break the ceiling or the floor. So let me go grab that real quick. I can find it. Yeah, here we go. SPY. Yeah. So if we were to look at a month of OMMs, this is SPY for the last, 21 sessions, which is a trading month. We don't break the ceiling. We don't break the floor. That's why everybody can sell spreads and feel good about it usually, because we're not going to break those. And usually they're going to collapse inward. They're either going to be stable, like here the ceiling was stable, but the floor collapsed in. Here they both kind of collapsed in a little from the start point, and then you look at the next start point. So it's kind of nice to look at. Positive exposure does not happen every day, so please don't expect it every day. I need to go back in and mark this, where's the Fridays? And also, I think we got positive exposure here. And there was another one, this one. But at the top, I don't know if we've had any this month to the top side.
Hey, user.
Yeah.
Where did you pull that month guide from?
I said pretty pleased to Rogue Moose, and he made it for me.
Oh, okay. I was gonna say because that's neat. I hadn't seen that before.
I know, it's really cool. But I think in the future we'll be able to do stuff, more stuff like this. It's just right now it's limited because, everything's in development mode. There's so many cool updates and features coming. But I just thought it would be a good teaching tool to show everybody, you don't see the green line coming out of this white zone. You just don't see it. So
Can you share that image in the chat?
Yeah, I'll put it in the chat.
Okay.
Yeah. So positive exposure in the numbers would be, let me put this in here. And like I said, this is just like something that one of the owners was sending us to use for teaching to show, because it's hard when you're just looking at a week, like this. Or, that's not it. Sorry. Thanks. I'm going to end up killing my whole recording here on accident. Yeah, it's hard when we're looking at, a week at a time to see a trend or evidence or data. We can pull a whole range if we want to. But for the numbers, he was asking where do we see it in the numbers? What I would look for in the numbers, and just ignore these other drawings, is up here where you see the PML disappear, right here. So at 11:43, we lost PML. Wait, no, sorry. That's the wrong one. My bad. It's here. It's on. Oh, shoot. I lost it. I'm challenged. Sorry, guys. Do not try this at home. Okay. So what I'm looking for is, oh gosh, it's not going to let me draw on it. The trend is your friend and screenshot is my friend. Okay. So here where you see the PML price go to 0, that's an indication that we might be in positive exposure. Here we lost it as well. This means the data is changing so fast, there's no read. The exchange is like adjusting. And so when I see this, when I see this happen, this is not a very straight line. If these stay zeros, I know we're going into positive exposure because it's lasting, right? But they revised the ceiling very, very quickly right then. So then I was like, okay, no, it's some true positive exposure. They've got their new ceiling right here. We're maintaining in the margin. But see how this number here went to $56? That's probably where we got the positive exposure. Because now the ceiling's not revising fast enough. And so with this thing happening every 3 minutes, it's gone. We lost it. We didn't lose it. The market makers lost it. And then they finally come out with a new ceiling at like right at 4 o'clock. And we're back to normal. Well, it was at 3:57 actually. So can you see that? It's very, and I'll screenshot this part. So I'm looking at the distance from the ceiling, which is getting closer and closer. And then it goes to $56. That's obviously not correct, right? So that's where we get the gap in the data, and that's where we can see the positive exposure. It looked like it was happening here, but we're watching the other forms of Confluence, we're watching the chart, we're watching the OMM, and we were, 75 cents away, almost got it, but they revised it up. And they kept revising it up. It went from 23, 35, 53. They didn't revise it. This one, I don't know what's up with that number. 748.23. And they revised it up like $1.25 from here, but then up here it caught it. So it was really close. 748.71, 748.95. And they ended up putting it even at the top at the end. They pushed it way out of the way. And maybe somebody else with more experience can explain that better than I can, like when that happens and why that happens and all of that. But as far as I know, as a user watching this, that's what I'm looking for with the numbers. If we lose PML, I'm paying attention. Let me put that in the chat too.
Hey, user.
Yeah.
I got a couple of questions about the you know how you're talking about like the confluences with vector and OMM, like if
Yeah,
you
do you
could.
want me to pull the chart back?
Yeah. So my question is like, so on the OMM, you can see that at, I forget what time it was, but I think it was like around 11:30 or something when you're seeing like there's a significant rate of change on the OMM. And then you had the side exit also on Milk's ES chart. What do you like? Are you waiting for both of those signals to happen to enter, or are you using the vector primarily to enter? Like, how would you know when is a like a safe place to get into this trade while like also mitigating risk or having a decent amount of risk?
Okay, you mean like me personally?
Or like,
Like
you
what
know,
was
like
I watching?
yeah, it just in
Okay,
general, like, I mean, I know everybody trades it, like, kinda different,
it's
but,
okay.
like yeah.
I mean, I'm not gonna teach you guys how to trade per se, because everybody's risk and all that is different. That said,
Right,
I can
right.
show you my setup and what I
Yeah,
was looking at that day. Okay, so I just did a screenshot for this because we got the OMM, we got this. We already talked about where the confluences are.
right.
I'll go ahead and just circle them. I don't know what color to use. We'll use the blue because it's easy. So we were looking at this, this, this. We talked about that. That is definitely Confluence for me. That shape happening like that. We talked about the PML crossovers. There was only really one big one, right? We talked about these guys, and then they took over. So I'll just circle it on cues too, real quick. Like that's a rejection. That's a PML crossover. So, and then we talked about staying in that margin, like here, how we maintained that distance from the ceiling, even though the ceiling was revising up, we stayed equidistant the whole time. So that's called like pinning to the ceiling, but you got to remember the ceiling's moving. So it's not like we're going up, we're going to hit it. No, the ceiling moved. Pay attention to where the ceiling is because we never actually touched it. So all of those things are going on in my head, and the chart is looking like this. So this is my chart, my messy chart. This is the clean version on SPY. This is the contract, the 746. This is the 475 put. So I've got a call and a put on my screen at all times, just like Russell. That's the best way to, if you had no other tools, you just had your levels and your, Thinkorswim or whatever. If you've got a call and a put, you're going to see the changes inversely where the call is going to follow the underlying, right? It's going to follow the same shape, and the puts are going to be opposite. So when I see the put take off, I'm paying attention, right? And then over here at the same time, so this is like 10 o'clock, 10 o'clock here, call's not doing well, and then all of a sudden the call starts moving. Well, that's when the put started dropping. So if I could like stretch these out to be like the same time, like almost like the same time width or whatever. Let me see if I can do it. Like the settings are different on these two charts because this is my normal regular chart. But anyways, I'm watching this as well. So when the put starts doing something like this with a perfect, below vector, and it's not even coming up to test it, looking at the call, and the call is doing the same thing, but to the positive side. So that's yet another form of confluence that I'm just looking at while I'm watching the underlying. So we put this on a 5-minute chart just to make it smaller and easier to read. Nothing about this chart says we're going down below vector at any time soon. Maybe there was a test and there was a test. And this, again, this is a contract, so it's not going to have the same angle as the underlying. But let me get back over here. So when we got the side exit at 11:35, here's 11:35 on the call. We're getting basically a side exit and a green signal from vector. So confluence, confluence, in addition to all the other confluences we just talked about. And then at 11:35 on the put, it's still green, but it's going down. So it's like, okay, it's literally watching it fall while this is watching it go up. So, and it's just kind of like when you're driving down the road and your peripheral, you know, you don't turn your head to look at someone on a bicycle. You're watching them as you pass by and you see them in your rear view and you keep going, but you're maintaining your distance. That's this. This is my peripheral vision. This thing is always on the chart while I'm looking at the underlying, while I'm looking at the levels, while I'm looking at the OMM and the data warehouse. So it's kind of like air traffic control in here. I have like 4 monitors all over it. But that's what I personally am watching, as well as the other stuff I showed. Where'd it go? This, all of those confluences and the OMM. And, you know, again, we can see each time we had the crossover, that was when we had the change in the underlying. Right here, 1038, here's 1038. Whoops, sorry, here's 1038. And then 1135, about right here. And the 1135, again, it doesn't have to be on top, but it can be a signal that it's changing its direction. And this is really important because it doesn't mean front run it or anything, but it means get ready because it could go. So we can see that the bulls were trying. And Russell's posting in the professional chat. Like I said, that's another confluence for me. I'll just pop in there and be like, what are we talking about? And he's like, yeah, they're trying. And by the time they're trying and winning, you know, the trade is already underway. So if you had front ran it, it would be around this 11:30 point. But by the time you have your full confluence and we've broken above, it's 11:47-ish. And above, here we are, we're tangled, and then it breaks loose around 11:47. So where's 11:47? Right here. So it was the entanglement. We broke above the pivot. That was Milk's pivot. And we took off. So it's just, and yeah, we initially took off, pulled back, and then took off. So that's where the takeoff point was the 11:50 a.m. right here when it went. I just really love this example from Friday because it had all the little textbook signs on it. And of course, you can do the inverse for a short day, but I'll be honest, I'm terrible at going short. I'm still trying on that. Does that answer your question though, of like what you're looking at, you know, with your actual trade or with, because everybody was probably in puts because of this. So that would be the time to de-risk when it turns around, right? De-risk or leave a runner. But at the point that you see the call taking off like that, I'm getting out. I'm not waiting for some, you know, micro pullback. I'm seeing that we're taking off the other direction, especially on the OMM, because the OMM, I mean, we're all about the OMM lately with really trying to help people understand how to read it. But all that data I showed you on the chart, that's what's behind this. And it's just such an easy way to see who's in control. So for me, this is really nice. I stream this on an iPad on the table next to me. So it just runs all day on its own screen. It's a small screen, but it's It's enough. It's great that it's live.
Yeah, thanks, user.
Yeah, you're welcome.
Appreciate that. I had one more question, if you don't mind.
Sure.
So on the OMM, you said like you're watching for a significant rate of change. Like what is there like? Do you look for like a specific like quantity, like over zero point 0.3 is a significant move, or like 0.4, 0.5? What exactly is a significant move, or is it like more relative to what's going on that day? So like I know you said at one point we were just trading at like, all right, it was like 2.6 or something, and it just kind of hung around there, and then you had like a big pop, and it went to like 3 and then 4. So that's kind of confusing for me. If you don't mind explaining it.
Yeah, so the ratio can still be somewhat lower as long as it's positive, and we can still be moving pretty good. I haven't seen a 4-day in a while that I remember, but we've been hitting the 2s and 3s. But it has more to do with the puts above and puts below is where the ratio comes from. I think I saved. Let me see if I saved it. Yeah, I know where it is. We were doing some stuff the other day. I have it airing on. Okay. Yes. I have the one for tomorrow too. So let me grab that. We have the overnight levels. So left, right. So when we're looking at the rate of change on and this is not Friday. This is just an old one. On a market maker landscape, you can see the puts below and the puts above, and we're just taking that number and dividing it. And so you can still have a decent move as long as you're positive. But the thing that I'm looking at is, are we going from 1.2 to 2.4? Or are we going from 1.2 to 1.4? Like, this is slower. It's just not changing that much. So the way that I kind of look at the second part of it is the difference of the bull bear is it just subtracts these two numbers. And then I also like to see, are we at 1 million? Or are we still in the thousands? So the other day when we started out, I think QQQ was like 400,000 to 800,000. I'm like, whoop-de-doo, that's not fun to trade. that's barely anybody even doing anything. And then by the end of the day, these numbers are in the 2 millions and 3 millions. And the difference is usually, around 1 million or less. But when those numbers start turning to 4s, it's very significant. Let me see if I can find. Yeah, I can find it. Just give me a second. It's going to be here. So if you see the difference in the millions of the difference of these two numbers, it's 2 million, 2.8 million. There's 4 million contracts down here. Whereas like in the morning, there was only 800,000 on top and 400,000 on the bottom. And that much more trading's going on, but we're looking at the ratio. So if incrementally it's not changing that much, that's fine. But I do notice that the difference, this number, is usually increasing when we're starting to see the 4s and the 3s and the 2s. Very, very bullish. Then you're like, well, it happens when we're bearish. You can only go from 1 to 0. So it is harder to read on the bottom because the rate of change on the bottom is going to be, it's not going to grow exponentially like that. It's just going to be negative. Well, it's not going to be negative. This number will be positive, but it'll be between 1 and 0. So you kind of have to look at this number, the difference, to see how negative we really are, if that makes sense. Let me see if I can find. Yeah, it should be here. It should be here from the other day. I might have to use Qs for the example, though, just because that's readily available and I didn't draw all over it. Let me see if I can find. Yeah, here we go. So if you look down here where we went negative and we're in the zeros, this is the bearish cycle. it went from 77,000 contracts. So we had only 200,000 contracts to begin with against 276,000 contracts. The difference was 77,000 contracts. Not a big deal. But later, here we're negative again. It's 200,000 is the difference, but we're up to millions of contracts already. We got 1.3 million on one side and 1.5 million on the other side. So looking at this number tells me what, how strong it is when we're negative, because just the fact that it's below zero, it's incrementally smaller, I guess. I don't really know how to explain that. But you can see here we're 200,000 away. Difference. Here it's only 16,000, so it's kind of in balance. And you look and there's 98. 98 is pretty much in balance. So we were wobbling through this whole zone. But that's how I read it. And like up here, we're 677,000 is the difference. Because now we're moving. But on a negative day, you'll see this number, increasing very strongly negative. But this number might not change as much because it's 0 to 1. Does that make sense?
Yep. Yeah.
Did I answer the question? Okay.
Thanks, user.
Yeah, I really, really like looking at this when I'm not sure. And just like, it takes time on the charts and time in the system. You don't have to master the system right away to be able to use it. If you can get good at reading the OMM, this is tradable. And one of the things that, Russell was showing just recently is, this PML crossover is its own trade. You can trade this. Every time we are at PML, the market makers want to take price away from PML. And let me show these two together. This one. Yeah, this is for tomorrow. So when we're at PML, right there, their exposure for tomorrow is $323 million. Even if we go to the ceiling or the floor, the exposure is only going to be 47 million or 21 million. So either way, we're happy, right? But look how far we are to the ceiling. So we're very close to the ceiling here. So that tells me they're expecting, to go to the ceiling tomorrow because we've got 841,000 puts below and 400 above. That's like a 1-to-2 ratio. But again, I'm not super excited about it because that's still less than 1 million contracts. So in my mind, it's like, yeah, well, let me see this at 11 o'clock when there's millions of contracts in play, and then we're really going to be able to determine the direction. So that's why it's important to wait for the first print unless you have other confluences telling you to get in a trade early. Because once they execute all the orders at 9:30, and we get those first prints around 9:45. By 10 o'clock, the trend is setting itself. All these numbers are changing. And if it's still bullish, you're going to see 1.2 million contracts here, not 800,000, and if it's more contracts below than above, we're going to the ceiling. It could take all day, but we are going to the ceiling. Now, if that were to flip and, first print comes in, and this number turns to the 800, and this is 800, and this is 1.2 million. Guess what? We're going down. But they don't want to be at the PML. So even if we were to go down into the PML, like here, they don't want to spend a lot of time there. That's the worst spot for them for exposure. So this was a failed floor test, and I think not floor test. That's not the wrong way to say it. This was a failed attempt to take price to the floor. It reverted and went back up. But what I think happens, and this again is anecdotally speaking, it's counterintuitive because when prices going up like that, and we saw how many puts got piled on, and this is again for tomorrow. This is not the one from Friday, but we saw the number of puts being bought as price was going up because a lot of traders think we've been high all day, we have to go down. And they buy more puts and more puts. This number was like really high. So if they're putting that many puts, on, we're going the other way. They're not going to pay those out. So it's just counterintuitive to what you might think. We're high, we must be going low. But when we're this bullish and the bears are down here, these ratios are so strong in a bullish manner. Yeah, maybe there's not a lot of room for upside, and that's boring. But it's also telling you, like, unless we get positive exposure, we're not going much further up, but we're not coming down. It's a hold, it's an impasse. It's just we're stuck in the ceiling margin, and you can relax, go mow your lawn, or you can wait for the positive exposure if it happens. And usually it's going to happen near the end of a session, or if there's a news tweet, it's going to take some kind of a push to push it the rest of the way through, because, they've got these things locked in. So, just rambling at this point. Let me see, go through the chat. So Momentum Mori put the market maker and spread monster levels for SPY and QQQ with conversions for ES and NQ. Thank you. Let's see. Yeah, previous examples of when the ceiling or floor did fail. My problem is the OMM shows me the move is continuing. By the time I see the change to confirm the move has already happened enough that I don't want to chase. Yeah, I mean, I think I see what you're saying. So, like, for example, here, if you were just going by the OMM, and, that's why I look at the numbers too, because they help me know, like, are we speeding up or slowing down? But like here we have a PML crossover. So the trade would be, let's target the ceiling, because what happens when we cross PML? Market makers want to take it to the ceiling. But you got to remember the ceiling's moving too. So it could be collapsing in, it could be expanding up. So the idea would be then, well, how far is it from this point to the ceiling? Ceiling's at 746. Let's just say it's at 746. And where price is at 740, 250. We'll just say it's that. What's halfway to 746? Like 744. Well, let's target 744. Let's not target the ceiling, because we know the ceiling might come down, and then your call is sitting up here in no man's land and it's not coming back, which is why it's easy to sell, spreads. But anyways, if you took this trade and you targeted halfway to the ceiling, and we'll just say we chose I guess we just choose 745. It didn't make it. It started here, it didn't make it. That'd be like halfway to the ceiling. So we're out of that trade. We're going to, the below the PML. So we can take another attempt here. Target halfway to the floor, still didn't make it. We're in chop. We're seeing that we're in chop because of this going on. So now we're at this PML crossover, this one. And what's happening, not only was the bulls coming up and the bears were going down instead of across and with and tangling, this was an angle down, this was an angle up. So if you could only see that, if you could only see this much of it, you would see that we went up and down in like 2 prints right there. From this point to this point, and this point to this point. And up here is when we made the crossing of the PML. So are we targeting halfway to the ceiling? Yes, that was like, what, 744 at this point, and we hit it. And then it went deeper in the money, and it stayed in the money the rest of the day. So that's just one way to use this and not feel like you're chasing, because, there's chasing and you're just jumping on board, or you're actually looking at a level that you can use. And, it failed there, but here halfway to the ceiling is pretty easy target to shoot for. What happened over here? If we targeted halfway to the ceiling, would have been about here. Same thing, it would have gone in the money about here. Either way, with this thing moving like that, even if you weren't in the money, your contract would still be reacting. And what I mean by that is when you see the contract getting a reaction like that, this one went from 9 cents or 13 cents, top tier, top tier, top tier. So from 9 cents to 13 cents, it's still a decent trade if you're in with size, whatever. But everybody here likes 100%. So we're going 9 cents to 57, or even if you waited and chased and took the next, the next pullback and got in here, you'd be going from 42 to $1.28, 42 if you held all afternoon. 287 is where that one maxed out. So there's other opportunities to get in without feeling like you're chasing. You don't have to take just the signal as the only signal because we're going to pull back. Meanwhile, we're watching this put. So at this point where we pulled back at 130, here's 130 on the put. The put's picking up. So I would wait until that put fell off again and then get in. So 130 here, that would be, a decent entry. But then you're dealing with all the chop too. But you don't have to feel like you're chasing as long as you know what you're looking for. So there's multiple entries on these contracts if you're waiting for the pullbacks. I think Milk words it like the pops will get sold or the dips will get bought. That's what's going on here. You buy the dip and now you're in the trade. And, of course, going closer to the money and all of that is going to have a bigger effect on your leverage and what you're doing. But that's just one way to look at it. And then over here on the 1 minute, because I always have a 1 minute on the chart too. So there's a 1 minute and a 5 minute. These are other, because the vector has come up so far and you can see it and it's level, still level with what's going on over here, this dip would be okay to enter. So, don't chase it up here. Don't chase it when you're extended. But each point is another chance to get in the trade. There's like 1, 2, 3, 4. As long as we're getting those bounces, it's not really chasing. Chasing is when we're halfway through the move and it's starting to pull back and you're just now getting in. Like, wait for that dip. Wait for that confirmation that we've dipped. And then maybe that'll help you. And then be prepared with a stop if you're wrong. Yeah, I know what it feels like to chase because sometimes I'll enter here and I'm like, oh no, we're already going down. But it's just a vector test. We almost always do this. I mean, hardly any trades look like this. Wait, hardly any trades look like that. They're all looking up, down, up, down, up, down, up, down. Eventually we go up, but almost none of them go straight up like that. Let's see. You have previous, okay, we did that. Yeah, and as far as the previous example, when we're showing this, I am gonna see if there's a way I can figure out where and when we had positive exposure. Could probably just look through the chat and figure out the dates, and then we'll circle them and see what those charts, what those days look like in comparison to the rest of the days. Like, where's that anomaly where we're seeing it? Was it on the top? Was it on the bottom? What else was going on that day? There's going to be something going on that day because it usually takes a catalyst of some kind. It doesn't have to be much. I mean, OPEX, sometimes we get it during OPEX just because everything's so, not average on OPEX days. I think June 16th was an OPEX. So let's see. Go back through here. When I had the data warehouse open to the OMM ratio Friday, I could not use the fractal graphs. Is that how it functions? Generally, yeah, you have one tool open at a time. And so what I do is I have, this thing happens when I'm streaming, so let me just shut off. I'll show you guys how I do it. But you do have to kind of lock in and not have to want to check other things while you're using it, but it's easy enough to get in and out. So, okay, I have to readjust this. So in the morning, I like cycle through all my charts, and then right before like the bell or right after the bell, I'm pulling up my 1 minute chart. I'm zooming in. And this is just how I like to do it intraday. Some people use a 5 minute. I make sure I can see, as much as I can see. But then I pull up the data warehouse. And I put it way over here in the corner. And we don't have any numbers right now because there's no numbers to be had. So I have the date pulled up from Friday. Here's Friday. And I only keep about that much of it in view. And I'll squeeze that over as far as I can. And I'll squeeze this over as far as I can because I want to be able to see as much as I can of the chart. So my timer is on. My chart's updating every 30 seconds in the background without me touching it. And then my data warehouse is running in the foreground. So I'm able to watch these numbers. So we can kind of see like, chop, 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 chop. And then we came out the top and then we ran up and then we ran down. So those numbers should still be on here from Friday. On 1 minute, 3:45. It's probably about 1, 2, probably about here. Oh, and then the other thing I did this Friday anyways, I don't do this all the time, but I'll click the linear chart too. Because when we're chopping like this, I like to see where we are in relation to the vector. And the nice thing that happens when you're using the linear chart in the system, it gives you yellow when we're in the golden zone. So every time we go in the golden zone, this linear chart turns yellow. And so I'll use that sometimes if I'm getting confused, like where are we at? And then I can see both. But sometimes, depending on the wave time, this will be on top of this so badly that it's hard to see. So then I don't use it. And you can, switch it to 5 minute if you like the 5 minute better. But see how the 5 minute, this one's overlapping. But over here it wasn't. So it's just something that, you can do it either or I do rely on that a lot. So I just keep it in the foreground. How do you chart buyer-seller objectives? So the buyer-seller objectives are actually coming from the milk chart. And milk uses the motive wave system like he shows in the chat. And so for the anatomy of a milk chart, there's parts he's getting from Fractal and there's parts he's getting from order flow. So the buyer-seller objective is order flow levels. So I can just break down the anatomy of his chart real quick. So when you guys are streaming, you know what you're looking at. And the parts that are proprietary are his order flow strategy. And that's the part that, there's no videos on it. He does a Mentee program, but all the other components of the yellow box and the ceiling and floor, there's videos and you can get it yourself. So basically, on the yellow box, we've got the yellow box, the red box, the green box. This is derived from a Wave 7 60/50 chart in the Fractal system. So that's Fractal. And then the IV walls, those are derived from the spread monster. So he drives the IV walls on a 4K monitor very precisely, and that's getting done with the Fractal system as well. And then the overnight ceiling and floor, he's writing the option analyzer tool in the Fractal system, getting the overnight, like what we were just looking at, this. And he's pulling the ceiling and the floor from there. And then throughout the day, he's updating the ceiling and the floor. And he's using the OMM for that because it's, live updating. You don't have to like go run an extra market maker landscape unless you want to, but it's the same values. So he's updating the ceiling and the floor after the first print about every half hour, and he's using the OMM for that, and that's Fractal system as well. And then over here we have the short average, and the short average is coming from the spread monster. And let me go grab one. I haven't run it yet for tomorrow. Been busy. See if I can find. My goodness. I have it. Just give me a second. Okay. This isn't for tomorrow, but we'll look at one for tomorrow. So that short average and long average is coming off the spread monster right here. Short average, long average. And where that number is coming from is it's taking the average cost or average price of the puts down here, the $1.65, and adding it to where we closed, the last price. And then the long average is coming from the average price of the calls being added to the last price over here. So that gives us our long average and short average. Again, this doesn't match this, I don't think. Oh, yeah, I ran this midday actually, 7:31. So when you see a purple line, that's where price actually occurred. It's kind of neat that it was minding these levels from this band to this band. But anyways, so that's where the long average, short average, and then the net dealer. I'll show you that too. Oh, wrong one. I'm all over the place. Let's see. Bear with me. Here we go. Net dealer. Now this one's for QQQ, but you know, again, the anatomy is the same. Short average, long average, and here's net dealer. It's the letter C. It's a sweet spot where the market makers expect to make the most money. And it can be used as a target more times than not. We're going to hit it at some point, but that's where that number is coming from. And he's got that marked out here. And we did hit it 1, 2, 3 times, you know, before we took off and headed for the ceiling. And these things are derived the day before, you know, after market close. These things, the ceiling moving, the OMM, that's all being derived in real time as the market's moving. So we get like our map and then we start driving the car. So you have to look at it like you can't marry these numbers and expect them to hit all the time because things change as the market changes throughout the day. But they're still there as very big levels, very relevant levels. Like nothing's 100% or we'd all be rich. So yeah, so the buyer and seller objectives, RTH gap, seller positioning, non-fair value, all of these zones are coming out of his order flow system, and those aren't anything I can really discuss. Over here on the right, this is of course, you know, sell pressure, buy pressure, you know, buyers and sellers. Over here, we talk about single prints all the time. Single prints are just where, you know, you can see how fast price went through this zone. It went through here really fast. It means it went through another point way over here and created single prints. So when we see these purple boxes, they come and go, and their areas of very little resistance usually, but sometimes we bounce on them, sometimes they eat them up. So it's just, you know, but when they show up, it is interesting to keep an eye on these. I do like the single print trade where I can see if we're coming into it, we're probably going to clean them up, you know, but that's something that we talk about in chat all the time, in professional chat when it's happening. A lot of people are pointing that out. But yeah, so that's the basic anatomy of a milk chart and how we use the fractal data with his order flow data to build a bigger picture. He's an order flow trader and he trades mainly ES for anybody who's new and doesn't know. But yeah, so you can take your existing trading system and also pair it with these levels from the fractal system and see how you do. because, you know, it's not like there's one right way to do things. There's a lot of right ways to trade. But layering the ceiling, the floor into your trading and where those market makers want to keep price, that's going to help a lot, no matter what system you're using. The institutional side of trading and knowing where those guys are going is very, very helpful. And then, of course, we have the fractal chart, which just levels out all the noise of the market. So if we turn it over to linear, oops. This is my favorite part. So we're going up, but we're pulling back, we're pulling back, we're pulling back. You know, we're on an uptrend. But when you put it on a fractal chart, now it's like we're in an up cycle. Well, these are longer up cycles than these down cycles. So by about here, we're seeing another down cycle, but we're not expecting it to, you know, these are pullbacks. So this is the trend or continuations. These are low pullbacks. So each time that we were pulling back, I was noticing like we haven't even left this average box. We haven't even left it. So every time we were pulling back a little and I was looking at the OMM being bulls in control and looking at the values not really fluctuating too much, you know, it just made me think, okay, we're still doing more upside. And each one of those legs up was here. These are the up cycles. These are the down cycles. So it's kind of nice that, you know, this is another confluence that we were long. We just really didn't have anything even trying to come out of this average box for a reversion. I was definitely looking at that too. I think I posted it. I'm like, we're just wobbling around the pivot. But yeah, once we get maxed out on the ceiling and we're within that margin, it's a lot to get out of that zone. So the three options are: one, reversion, but you have to have the other confluences to support that. Two, positive exposure, we break the ceiling, but again, you have to have the other confluences to support that. Or the third option is we stay within the ceiling margin and we track sideways the rest of the session. That's kind of what happened until the very, very end when it dropped out, like after MOC. This is the final few minutes of the day. Oh, the FOMC chart. Yeah, July 29th. Okay. Does the chart automatically update every 30 seconds? Oh, yeah. So the timer for the my chart, there's good things and bad things about it. I think Russell's going to be adding like a toggle switch soon on one of the next updates so that you can turn it on and off easier than doing it this way. But you go into the hotkeys and you have to choose event, 60-second timer. I'm actually going to turn mine off because when we do this, I got to turn it off. And then Monday morning, I was forgot to turn it back on. And then you would say reopen fractal graph with no control adjustments. And I used to use a 60-second timer. And then I saw somebody, I forget who it was, using both. So it updates every 30 seconds, except for every third rotation, it's a minute. So I have to wait a minute, like every third rotation. So it's not too bad. And it just updates. So for live trading for me, I just have this on another screen, watching it the whole time. We're going to look at the FOMC thing in a minute. Does the chart, okay. Is there a way to make the data warehouse auto refresh? No, you do have to demand it, but my workaround for that, you know, for ease of use or efficiency is, as I was explaining, I just keep it in the foreground. And instead of going like right click, volatility, OMM, and then run, run to get it. I've got them both pinned up here with like a 000 in the front. So they're at the top. And I'm just like, click, there's Qs, there's SPY, there's Qs, there's SPY. And anytime I look over there, I just click it because I don't need it to run when I'm not looking. So it's kind of like, it doesn't bother me. But to have to do it like this or click run or switch them out and load them, that would be a problem. So the way you do this is, and this is for any of the queries that you want to save, you right click, come down to volatility queries, OMM ratio. By default, I think it's on QQQ. You click run, and then you can come in here and just change the ticker to whatever ticker you want. And I mean it, change it to NVIDIA, change it to Microsoft, like use this, it's really good. And then up here, you would just type, you know, for me, I put a bunch of zeros in front, so it would come up to the top. But you can just type whatever you want there. So like, you know, SPY, OMM, whatever you want to call it. And then once you get that typed, you say save, and it'll populate over there on the left. Once it's populated on the left, that's practice. I always clear my window so I don't actually write over it. And then all you have to do is double click and it'll run. So all these queries will just run. Here's my end of day. You know, I run that to get those end of day adjustments. You know, it's fast. So it doesn't bother me that it doesn't automatically update. So are you saying that you can have the OMM ratio open, have Fractal? Yes. Yes. So Mount Kenio, yeah, just like what I showed. And that's how I do it. And then, of course, you just close it if you need to go run different charts, you know, and then you come back and open it again. And then Alex is saying, is it possible for price to coil PML until the end of a session, like in a box, or will price go up or down one way or the other? So we can look at that. Let's just look at the weekly one. It's here. So this is the one for the whole week. This is Friday. So last Friday to 11 in the morning at the current Friday. So when price is wrapped around the PML, it can coil, but sometimes it'll coil through the rest of the session, and it looks like a braid almost. It happened. Hey, did it happen? Here it's starting to do that, where it's, you know, they're switching positions, and up here you're seeing the PML switching positions. I don't have a picture of the one for, I think, Thursday, and both of these looked like someone had just braided the lines, and then we were just tracking sideways the whole time. I think it was Thursday. Was it Thursday? I forget what day it was. Oh, I can just look. So this is Thursday where we were stuck here. We're stuck here. Maybe it was Thursday. If anybody has a close-up of the DMM, you know, which is the daily chart, you would have had to have the OMM on screen to be able to get that picture. Yeah, so you know, but when you see it crisscrossing like that, and these are price lines, by the way. These are price. This is the price. So if you see that we haven't even left this zone, that's your box. You know, the PML's like stuck here. Price can get stuck. It's easy to figure out these numbers, you know, when you're trying to figure out, you know, are we range bound? What's going on? I'm going crazy with my thing here. Sorry. After the call, yeah, I'll save as much stuff as I can for from the chat. It's hard to do it at the same time. So going back to Voldemar's question for the FOMC. So July 29th. That would be, did I just get rid of it? No. I think it's here. So July 29th was, no, that's the daily one. I have to go back and get it. Guys, hang on a second. I don't know that I have it. Oh, wait, we can just grab it. So if you just need a week and the week's not over yet, you can just go to the Moose spot and get it. So I'll grab the one for the week. We can look at the FOMC day. It was Wednesday. All right, so Wednesday starts here. Yeah, so that's going to be a good example to look at the rate of change. We can do that. Let's do that. Let's see. I was just trying to read these other notes. Okay. And then for anybody who joined late, we haven't been recording the Sunday sessions, but we're going to start recording them now. They're still going to be informal. It'll be a unlisted link that we just put in the server that you guys can access it if you want to. And I still encourage everybody to talk like you normally do, because that's what this is for us to help each other and stuff. We're not going to be blasting it on YouTube or editing it or making it fancy or anything like that. So if anybody wants to talk, please do. So FOMC was here. We want the rate of change. Let me go grab it. July 29th. So I do have the query where we can pick the date. So we'll put in the date for SPY. Double click it, load it, and change the date to the 29th. Save it. Double click it. Okay, so now we're on the 29th. And what time of day did that happen? Because I can't show the whole thing, there's 102 results here. So 29th, that crossover would have happened probably about here. Yeah. So what time was that? That's the whole day, probably down here. About halfway through the session. 29th. Wednesday. So that would be 12:15 to 2:45. And then the other one from 2:45 to close. That's where we'll look. So 12:15 to 2:45. I think I can squeeze that on here. Yeah, we can squeeze it on here. So this is the day that we're looking at. I'll just maximize this chart. Go back on a 5-minute. Great, it's nice and big. Push it over a little bit so we have room. And then there's our data warehouse. We're ready to change, and our OMM is here. All right. So the date in question is the FOMC. You know what's going to happen next? I'm going to screenshot this because it's making me crazy. Okay, hold on. That one's okay. All right, that one's okay. I need all three of these. All it takes is one good question and I just get like all messed up. Try again. Here it comes. All right, so we got our OMM data from July 29th. It starts at around 11 in the morning, and here's 11 in the morning. This is the big move we're talking about, where we were at 12:15 to 2:55 and from 2:55 p.m. through the close. So let's just go mark it up and look. So that was 12:15 over here. We're at the bottom and we haven't crossed PML yet. So 12:15 is here. I don't know what to do because if I do it with the other stuff, the highlighter doesn't work right. 12:15. And then the next point was the PML crossover at, what time is that though? So 1 o'clock. This is 3 o'clock. Probably like, oh, we know where the PML crossover is. I can show you where it was. All right, so let's dissect it. We got the PML crossover on Wednesday right here. Well, how do we know where the PML crossover was? The distance to the PML. So here's PML, here's distance to PML. It goes to 0, right? Because we're at the PML. And that was at 145. And then we continued up. And now the distance to the ceiling is the max of that point. So distance to the ceiling got to be 145. That's closer to the end of the day. Ceiling distance. But yeah, that got messed up. Here we go, 74 cents. $1.40. So we got that close before we turned around again. So that's one way to tell, using the data. So this is the distance from PML when we're down here, way down here, and we're turning around. So without even looking at your ratios, you're seeing, okay, well, we're $6.59 away from the PML, and 3 minutes later, we're $3 away from the PML. And then we're, I don't know why that's at 5. I guess we fluctuated. Oops, sorry. Yeah, it pulled back again, and then we shot up again. And now we're closing this gap to PML. There's 0. And then at the PML above, back at, still at the PML. And then finally it just starts taking off here, pulls back again, almost touches the PML here. And then it's like $2, $4, $5, $6, $7, $8 away from PML. I mean, it just left the building. And there's your, here's Wednesday when that was happening. So we're seeing the bulls started breaking loose of this green. They started increasing at a steep rate, not at a mellow rate, all the way through this whole move, pretty much with some pullbacks. So you look at the rate of change over here where that all started, and we're 0.7, 0.9. Here we jump to 1.1, so now we're positive. But we could tell that like the move had already started, looking in hindsight. But if you were just waiting for a true PML cross and you were waiting for, and you were waiting for that rate of change to turn positive, this is where that turned positive. And then let's see, okay, is it barely positive? Is it big positive? What's going on? And it was like 1.1, 1.3, 1.5, decent, that's steady, then back to 1.3. So that's a wobble. 1.28, that's still basically 1.3. 1.06, oh, now we're going back into balance. What's going on? So this is a pullback. So we were at the PML, we took off, and then we got back to the PML. So that's where this pullback with not significant changes in these numbers of this rate of change is like a wobble. And then we go back up, we're close to PML again, but the difference now is that the PML is moving too. And so price is moving, and we're seeing that we're getting closer to the ceiling. So we're looking at this number going from 1.2 to 1.7, 1.6, 1.4. It's way far away from the 1.0s that we were looking at before. Now we go to 2. Now we're going back to 1. And oh, this is where it turned around. Sorry, my bad. So anyways, we got as high as like 3 before it turned around. And at this point, it looks like we were already going back below. No, that's ceiling. Sorry. Yeah. So PML, we're $1.40 away from the PML to $20, $1.50, $4, $5, $6. This is where it maxes out from the distance from the PML right here. We're getting very close to the ceiling. So how far are we in the margin? Let's look. We're 74 cents away. We're well within the margin. We're about to hit the ceiling. And then it just turned around. Why did it turn around? I don't know. I'd love to know that. But we know it's turning around because now we're going from 3 down to 2.6. And this is every 3 minutes. This is actually happening very fast. So from 3.1 to 2.6, we just lost half of a point of, the percentage there. Then down to 2.1, 1.6. So in like 10 minutes, we've lost a full percent. Now we're going down to 0. Every 3 minutes, it's significant. It's significantly changing lower. But also would be looking at this to say, okay, well, what else is happening? We're just getting further and further from the ceiling at that point. So we're at the ceiling, and now it's $2, $3, $4, $5, $10 away from the ceiling. So that drop was fast and hard, like you said. It was a good move. But that's how you can use the data while it's unfolding to kind of help you gauge the intensity of the move. So when you see 0 and we're at PML, are we getting further? Or are we getting are we going higher or lower, basically? And is this number over here getting smaller or larger? Whoops, I keep doing I mess up so much, sorry. So when we're at PML, we're looking at 1.1, and then it went up. And this number went up. But then we came back to the PML. But then it went up again. And then it really went up. And then it turned. So that's how I do it. I'm still having issues with being recorded. I'm sorry. Is it possible for price? Okay, we did that one. Okay. Yeah, you're welcome. Does that answer your question, Voldemort? Yeah, I can nerd out on this stuff all day. I love it. And then it's so funny because, like, doing a recap of the day before and actually pointing out, or earlier that day, I think it was this, somebody had asked in chat, well, how would we have known? How could we have known that we weren't going to just come crashing off that ceiling? And I built this like before I would forget, because it was such an intense session of trading and watching everything. And I wasn't necessarily taking a ton of trades, but just watching it hit all these signals during the session was really cool. And then, at the end, I always like mess around with SPX based on end of day estimates and all that. But even that was hard because we had come so far off of our normal markers because we had such a big move to the upside. But there was a lot of contracts loading in, as you could see from the OMM. But let me see. Yeah, here. No, this one was pulled in the morning. No, this one's, I just pulled that. Okay. Yeah. So you can see like that ratio is insane. And there's the pink joining it. And there's, the bears, they just like, I don't know, they must have took a 3-day weekend because after about here, they were just gone. Does anybody have any more questions? Because we're going to wrap it up soon. I know we normally pull a bunch of charts. We could do that real quick. You guys want to pull net dealer and get into that? Big One says net dealer target price seems to be an amazing new addition. SPY hits it well. MU on Friday was bank. When is that being released and what does it look like for Monday? That's a great question. When's it being released? In 2 weeks. And every time I ask, it's 2 weeks. In developing, that's what happens. Russell has some things he wants to dial in on it because when he releases it, he doesn't want it to be glitching. So, myself and a couple other people who do have it, we're posting it in the Fractal Hub until you guys get the full release. So we'll be posting Spy and QQQ Spread Monster with Net Dealer, just that one screen because you guys can do the rest. And I'll just do it now because I haven't done it yet for the weekend. Let me get out of this. We'll go do it right now. And this is the market maker for tomorrow. So here's a chart. Did that one yesterday. Let's go do the. Oh, and by the way, last week I showed you guys how I do the spread monster values, or you can do yellow box or whatever, just by using the quadrant tool in the Thinkorswim. So that's what this looks like when it's done. There's my last price. There's the RGI, median walls. I actually added the ceiling and floor to this one, but it's kind of a fast way to get it done without spending a lot of time because I'm charting like QQQ and SPY, so everything's taken twice as long. Okay, so let's go play around with this spread monster. So we're gonna, for anybody who's new, we use a wave 1 daily, and as long as we have enough data, that's what we use to pull spread monster. It's looking forward one aggregation, so it's looking at Monday. So we use Friday's close as our date, and we're gonna look at Monday. But since in the spirit of us doing recaps, I'm gonna go look at. Oh, I can't shoot. I can't look at. I guess we can. I'm gonna look at Thursday, but we can't pull the contracts for Thursday. Bummer. But I can still do the Thursday looking forward to Friday, and the difference is you're going to see a solid line where the price occurred, and not not the X's. The X's show you where price may occur, and when you run it after the fact, you get to see where the price did occur. You can run it intraday too, but just make sure you're picking the previous day because it's forward looking one day, and if you pick the current day, it's actually looking at tomorrow. Okay, let's try again. When I stream, my fractal crashes a lot, so it's just what happens. Okay, spread monster. Try again. I'll go slow. So for tomorrow.
Are you going up? Yeah. How are you?
Hello. So we're gonna go into density graph. And some of the cool features, if you're seeing this for the first time, we can actually turn the background off and make it easier to read. But everybody likes that. But I'll tell you right now, being able to see the density of where the most, levels are is helpful. So take a mental note before you turn off your background. Obviously it's denser here, right? It's not denser up here. It's not denser down here. It's denser right through here, right through the middle. So we're going to turn off the background. Another cool feature, we can adjust the waves. But for now, we're going to leave them like this and get our levels pulled. When I do a spread monster, I'm looking for 200 aggregations and enough data points over here to support, the outlook for the next day. If I've got no flat lines here, no flat lines here, I'm going to set it to 250 days and try again. If I can't get it with 250 days, I'm going to set for 500 days and try again. If we're at all-time highs, sometimes we have no choice. We have to use weekday matching, but I tend to use high-low because it's just weekday matching. You're omitting some data by only looking at Mondays. So our net dealer for tomorrow is over here. And I set the cursor. Oh, I have to get ready to do a screenshot. This is so annoying. Okay, so we'll do 5 seconds. We'll see if I can get it done in 5 seconds. That's pretty close. Okay, it works. So I've put a timer on it and just try to get my cursor lined up. And then, where is it? So here it is. And then I like to highlight these areas. I highlight the whole zone. And then take the center where we just had our cursor. So the crosshair price there is 740.28. And a couple of guys were talking on Friday. They had already looked ahead and knew that the dealer level would be 740 for Monday. So you can look ahead anytime on a spread monster. It's when you're looking same day that you're going to get that bar and everything's going to look different because the market's moving. So, the long average and short average that we talked about right here. Oops. Right here. And again, these numbers are coming from the average call and the average put. Save it in chat. Okay, let's go to Q's. If anybody has any questions, just ask. I'm still learning how to use this chart too. There's so many cool features on it. And I was a little intimidated by the spread monsters before. And there's something about the way this one looks that it's just not intimidating at all. I'm not talking about like, so what I guess I'll just say it this way. I used to use a density chart like it's going out of style, and I love it because it's so simplified. And I know there's like so much data behind it. But this was very easy for me to read. Whereas now the new density chart is becoming a lot easier for me to read the way it's set up. So I'm just saying it looks like a lot, but don't be intimidated. After you've looked at it a few times and you understand what you're looking at, it gets a lot easier. So again, checking the densities in this zone, which makes sense because that's like the 50% outside move to downside risk, which matches our 50% medians, right? Most of trading is going to be like here. Turn off the background and try to get a screenshot. It's like so challenging. Okay. So get on there before 5 seconds is up. Got it. I got lucky. Usually it takes me like a couple tries. Okay. We're gonna mark it out. Same thing. Oh, this one has a lot more. I wonder if I went further out, we'd get that whole zone. But for right now, you just need this number. And then I'll notate this one as well. Long average. It's tied to the 486. This one's tied to 828. So net dealer, Winston, is the area that the market makers stand to make the most by the end of the day. Now we're running this 24 hours in advance because when we run it at 4:15 or 4:30 in the afternoon, is as soon as you can run it. We're running it for 4 p.m. the next day for close. So it may not get there all day. It may end up there, but ideally based on their plan for the day, just like when we're looking at a market maker landscape, we're looking at, their plan for the day. And these things at night for the overnight levels are almost always in balance. You can see it's like equidistant, the PML, the ceiling, the floor. So it's almost always in balance for their expectations. So same thing with the net dealer. We're pulling these numbers ahead of time. So anything can happen during market, right? But it's a guide. Okay, table bandit, high-low matching hasn't been working on SPY for multiple aggregations recently. Levels are super close on weekday. Oh, okay. Yeah, table bandit's been running weeklies on Sunday. I forgot to run the weekly. I just ran the overnight. We would and I'm streaming, so I have issues when I'm streaming. So what I'll do is if anybody else has it, that's great, but I'll run it with the nut dealer. I don't know that that changes with the weekly, but it would just mean I would have to go 5 days ahead and look ahead for the whole week, which I will do when we get off. But if I do it right now, I know my system will crash because it's streaming and overlap with streaming. It's touchy. Oh, we need the overnight. We did the overnight cues. I think we need the overnight SPY. Market maker landscape. Yeah, we need cues. So the option analyzer is here. We're going to go pull the nightly, weekly. For anybody who doesn't have the fractal system, what this does is it shows us the positioning for market makers and where the ceiling and the floor would be.
Hi, user. Here's Momento.
Hi, how are you? Did you
Fine,
share
thanks.
charts today?
Sorry?
Did you share charts today? Sometimes you share charts. I don't want to do them again if you already shared them.
I shared an Excel file with the market maker and spread monster levels for tomorrow and the whole week for SPY and QQQ.
Oh, nice. Thank you.
You're welcome. I just wanted to say that, but if you want, I can also pull a SPY that we have the normal picture because there it's in an Excel and with conversions for ES and NQ.
Oh, with what you shared in the chat?
Yes, I think it's one of the first messages.
Okay, thank you.
You're welcome.
Yeah, I'd like to do the pictures too, so we're gonna just run through it. So if
Yeah,
people
sure.
maybe know how to do it, yeah. But yeah, if you guys scroll back to the beginning of today's discussion, it'll be there. Thank you for doing that. So what I'm taking a picture of is the overnight levels for QQQ for tomorrow. Something we can see is right off the bat is we have a market maker dead zone. There's one checkbox that's for tomorrow. We're above PML, so whoops. So we're closer to the ceiling than the floor. So just looking at this, like what we were talking about earlier when we were deep diving on the OMM, the puts below is 326, above is 297. So that means we're probably going to go up, but this ratio isn't really big. You know, you can run it, 326 divided by 297 will give you your ratio for the overnight. One of the things with the market maker dead zone, and we know as soon as the market opens at 6, which is in 5 minutes, but this market maker dead zone on QQQ, one of the Fractal users, Chloe, has been, I don't know if she's exclusively trading this, but she's been proficiently trading this every day, testing it, back testing it, uploading data. And this thing is very reactive at futures open, this overnight market maker dead zone on QQQ. I'm not sure if it's the same way for SPY, but it's intriguing because, you know, we use this during the day a lot too, but it never occurred to me to use it for futures. And, you know, anybody who's was in here, you know, a week or two ago when she was in here, she was showing everybody how to make that actionable. It'll likely drop down to 679 tomorrow. Well, technically, yeah, if the net dealer is there as of right now. Now, new information can come in with MGI, which is market generated information from traders. Like what happened the other day when we shifted like 4 million extra positions went on, 4 million extra contracts went into play when we were just like, bouncing around 1 million contracts total for the day. So when that happens, yeah, things can change. And then when they change, everybody's hedging. So it just creates like a frenzy of covering and new moves. I'm trying to think through the catalog of things. Okay, we'll do weekly. Oops. When we do the weekly ceiling and floor, we want to select all the contracts for the week. It's checking all the 0 DTEs for every day. That's when it takes a couple minutes.
I had one question. To what extent do we need IV walls for intraday trading if we have floor and ceiling from option and analyzer?
That's a good question. While this is running, I don't know if it'll crash on me, but I'll pull up the milk chart and show you. And you can actually go back through his channel and look at all the recaps. There's a lot of charts shared every day that show these, but I like looking at his because again, he pairs the components of the different fractal tools with the order flow. So, and the yellow box and the spread monster and the option analyzer. So everything is on this kind of one chart. But here's an overnight ceiling and here's the IV wall, right? So we never breached the IV walls on this day. We tapped it, but we didn't break through. We didn't break through the floor either. So it's just a matter of having more than one piece of data instead of saying, oh, I'm just going to trade off the IV walls. We have more than one confluence. This IV wall happens to be near the ceiling, but this IV wall is not near the floor. So, the IV walls are coming off of the contracts, and so is the ceiling and the floor, but they work differently. There's the IV walls. I don't know if I can explain this right. Is Luke still here? Luke's really good at IV walls. This is still running, so I can't pull anything up. Let me see what table put a weekly recap. Let me see if this will explain it. Here's another recap of weekly levels. I don't know if he has the IV walls on here though. It's got the weekly floor. So we broke weekly floor a couple times. And we're just running it on Sunday. Weekly ceiling, we didn't even get close. So here's the weekly ceiling. I don't see IV walls on this one. Yeah, some of the guys that post the IV walls, we would have to wait till tomorrow, I think. I don't have them on my chart. Here's the milk chart again. This is just a daily IV wall, not a weekly IV wall. Ryder and Luke are big into the IV walls. So I think looking at their charts, and Ryder's been sharing stuff in the Gen chat. Let me see if I can find his stuff.
Also, if we break an IV wall, does it mean we also in like positive exposure or?
No, not necessarily. Yeah, if it coincides with the ceiling, sure, but no, positive exposure is when it breaks the ceiling or the floor. IV walls, there's usually 3. And so we will, if we get into the first one, the middle one is like more the hard level, and then the third one is the overflow. So sometimes once we get inside the IV walls, we don't leave. We stay in there and bounce around like it's in a box. You'll see price get contained in there quite often. It takes a lot to get back out of them. It takes a lot to get into them, and it takes a lot to get back out of them. So this is the weekly market maker, or sorry, yeah, market maker landscape. Let me take a picture of that. This is going to be the weekly ceiling and floor for QQQ. And I'm going to do the one for SPY. I'll show you on the spread monster where he's getting the IV walls from in a minute after I run the SPY, okay? So we're going to load the contracts, pick all the contracts for the week. It doesn't normally take this long, except when I'm streaming. So sorry about the wait.
I was muted. I posted SPY in the chat.
Oh, you did it for the weekly? Thank you. Okay, perfect. Then I can cancel. I'll hit cancel. Cancel. Okay. Yeah. Okay. So, Memento just posted the weekly SPY for us. And thank you so much. I see we got that. Okay. No. It's gonna want to crash again. Okay. So, Alex, do you want to see for Q or for SPY?
I think it's best for SPY.
SPY, okay.
I
So
think
we're
it will
going to
be
the spread
easy.
monster. I'm not the best at pulling IV walls, but I got the concept down. It's just I haven't practiced enough to get them perfect. And usually like Luke or Ryder or even Moki can come in and pull these things pretty easily. It just takes practice. So we go into the density chart, load in the contracts for the next day. Turn off the background. I'm going to make as much room as I can. So for the call side, what we're looking for is where this, see all this volatility in the curves, basically. We're looking for where it flattens out. So market makers aren't really expecting much more volatility past that point. I used to just look for the flat line. That's like way, way, way up there. So the nuance we're actually looking for is more like this. We're looking just to the inside of your cursor to see if we can get a flat line off of one of these. For example, this one, not quite there. You see it's concave. This one's pretty close. I could be wrong about this, by the way. I'm probably going to put them too close. That to me doesn't look flat enough. Last time I ran IV walls, I always double check against Milk's levels the next day, and mine were off by like 3 strikes. But this is how you figure it out. You want to do your alignment. And so I'm just going to do what I always do. I'm going to do a screenshot. And we're going to mess around with it. I wish I was better at this, but there's a lot of videos on how to pull these perfectly. So for me, I'm going to look and see, you know, again, where these flatten out. Down, turn this up. And I'm be honest, I'm just guessing. But this one's curved, this one's curved, this one's kind of curved, this one's getting flat. So I'm getting interested around this area. And I'm also looking at the upper areas of these lines, which I know that doesn't, you know, this is historical volatility and this is implied volatility. But for me, I want to see, is it aligning with what I'm seeing over here too? And it is. There's a level right there. So I'm thinking like price doesn't normally get this high. There's only 3 times it exceeded that. So this makes me want to use this IV wall, and it's pretty flat. This is not official, by the way. There's a lot of videos on how to do this. So I'd be looking at these three as, as my IV walls. If nothing else, it would be this one. So we use 3 of them. And then on the downside, you know, if I drew a straight line, you can see there's a curve there. So it's not that one. This one's a little straighter coming into it. So you're just basically eyeballing it and then going in with precision on a 4K and trying to get like a 1 pixel gap. I think Hazy's been practicing, Ryder's good at it. There's a few other people that, you know, they've just been relentlessly working at getting that precision down. But roughly, I would say they were about here this week. Did somebody pull them already?
Yes, they're also in this Excel file, and
Oh,
I'm
you pulled them on
wondering.
your Excel file? Okay.
I'm wondering if they are right. So I also like it to check with others and
Oh,
especially with
okay.
Milk.
So, can you take a screenshot of your Excel file and
Yeah,
I can
sure,
pull it on my screen? Because if I open the Excel file, it's going to launch all the Microsoft programs and it's going to mess up my stream.
sure.
Thanks.
I posted them.
And then anywhere you put your cursor on a spread monster, you're looking down here at the crosshair price. So like if I put it here, that's the crosshair price. You can just hit the escape button if you get these little notes, but you just hover. There's a gap there. So yeah, maybe these IV wells are further down than what I thought with my eyeballs. Okay, so he posted the ones that he derived. And I think I can overlay this.
I'm not sure. Maybe I have to change to match weekday matching,
Well,
but I'm not sure. Maybe it was normal. Maybe it was normal.
no, I don't think so. I mean, did you see flat if you saw flat lines? Yeah. So what did you get? Inner. I don't see a number there.
Sorry, I was just. It was just the true IV wall, and then for me it's like
Oh, here. So
yeah.
you got 753.
I think SPY was normal with high low matching for 200 days. Maybe for Qs I had to change, but yeah, let's see.
Oh, long and short. Okay, so 753 and 735.
Yeah, they're for
753, so
tomorrow
you
and
got that one, I got that one. And 735 down here, way down here. You got this last one. Yeah. So I'm seeing maybe here. Let's go look. Also, I have a mouse issue, so finding these perfectly, that one almost works. So you're looking at the center one, right? You're looking for the true.
yes, with I think that's with no pixel, but actually I derive it like when the mouse is below the curve. So I think in the video from Aveva it's explained like um yeah below, but I saw both ways, and I think
I
that's
just can't hold my
makes
mouse
sense.
fast still.
Yes.
I have an old mouse. That's another reason why I try not to do these too much. Okay. Yeah, that one looks pretty good, actually. So I would say it's going to be cool to check tomorrow when Milk posts his and see how close you got.
Yes.
At least when you're trading, yes, you can see that. So one of the things that, what did I do with that? Fractals, like, no way. Okay, so you got all those, and you just did the conversions for ES. Did you pull the RGI yet? Okay, I'm gonna go pull the
Yes, but
RGI.
I think it's just not in the Excel. I put them directly.
Okay. I'm gonna go pull the RGI. So the RGI, we pull that off of the odds graph, and it's this red and green intersection, or RGI, or red green intercept. Again, my mouse is wobbly on this desk. And the crosshairs is at 746.73. So rather than kill everybody with screenshots, I'm gonna go find the one for Q. And just write that in there. 746.73 RGI SPY. And then we'll go get Qs. I forgot to do it when we were doing QQQ. And just to rehash, this is the RGI. And so for me, once we get above it or below it, it's Confluence for a trade or to stay in a trade or to get out of a trade. It's just such a heavy level that when we do react to it, now sometimes it's way down here, it's not even in play. But I have this RGI on my chart every day. Just like Milk, he's got the pivot. I'll put his pivot on my chart as well because I want to know, what's that line in the sand for ES or, for SPY. But for me, it's a very pivotal level. I use it a lot. So let's see. And you get that from the odds graph. You can run the options chain and pull it off the crisscross of the options chain on a fractal chart. But for me, that's not as easy as doing it this way. But also the minute the market opens, all of those options chains start moving. So I'd rather have it on something that's forward looking and projecting than something that's sitting there that's moving. This isn't moving, if that makes sense. This is static. The options chain is dynamic. It's moving during the day. So this one is 680, 640. Whoops, 680. My stupid mouse. I swear I'm going to Best Buy this week. 680, 630 is the RGI for QQQ. All right, so I know the market's open. We're running late. If anybody doesn't have any more questions, I'm gonna have to go. But it was really nice hanging out with you, and I hope And this will be
Thank you,
this
user.
was recorded. I'm gonna try to upload it when we get off and see how well we do with our first try.
Yeah, I had one question. Do we often go over IV balls, or it's a very rare event?
You mean for the behavior, like the typical behavior
I
of
mean,
it?
for price, for example, does it often happen that price goes over IV ball, or it comes close to IV ball?
Well, here we interacted with the IV wall twice. Okay, so this is again looking at Friday. So the upper IV wall pre-market, it got close, but it didn't get there. And then it came down after open and wicked into the IV wall, but it was very resistive. It's really strong. It's hard for price to get there and stay there. It generally will go back the other way, and it did here. Now, let's just say it broke through. Well, up here, here's our IV wall. It did break through. It tried. It finally broke through, and then it kept going through the IV walls and almost stayed in here through close. So let's see, 4 o'clock. This is 4 o'clock. But then after hours, things can happen after hours because the dynamics change because the market's closed, and this is a futures chart. But generally, you'll see that once we get inside the IV walls, we don't come out. It's not always true. When we're in the IV walls at the floor, a lot of times when we bottom out, there's going to be a buyback of sellers buying to close. So that creates a bounce. So sometimes that's what can happen if we're in the lower IV walls. We'll see that buyback bounce. And that's enough to get it back out of the IV wall. So that could be what happened here, where it just wicked it and then took off back the other way. But again, if you look at the recaps of Milk's charts, we should just make a slideshow at some point. You'll see the behavior of the ceiling and floor, like when the ceiling's collapsing and the floor is stable, or, you know, the overnight ceiling, how price respects that. It's really good to look at those recaps because let's just say you want to look at only IV walls. Go in his channel, you can literally just scroll through it and look at all the recaps and see how price behaved with those IV walls. I'll go grab an old Milk chart from, let's just see where they hit the IV wall. I mean, it really doesn't hit them too often. I'm looking. I'm just not seeing when where we hit one recently. Because they're usually on the outskirts of the expected trading range because it's out there where where's that picture? Here, if this helps you at all. It's out there where the volatility is not expected to go. So it's, you know, these are flat lines. So you can pretty much figure like if 50% of the trading is going to occur in this zone or expected to occur in this zone, you know, the IV walls are way out here in the flat spots where there's not a lot of volatility expected. So there are definitely outlier moves when they do occur. Here's one. All right, so here's one where it shows, you know, here's the upper IV walls, the lower IV walls, and we came down, tapped it, didn't even make it to the middle and got back out. So it was very supportive in this case. It bounced out of there. But once it gets in there, if it passes through, this is called IV overflow, it can stay, you know, below and have a harder time getting out. Just in general, you know, with experience, just looking at these things over time, you start to get a feel for how the different things might react. For another one. Here's another one. Going through the Milk Alert channel because every day there's a recap and it's easy to, you know, go through these. So here's the example of, you know, overnight ceiling, IV walls near the overnight ceiling, overnight floor, we can't even see it. First print, floor, ceiling. So when you're saying, you know, do they act like a floor and a ceiling? Not really. The floor and the ceiling are totally different. They're being derived differently. But here it hit the IV wall, the inner IV wall, and barely breached it. Like right here. Oh no, that's not the IV wall. Sorry, that's the ceiling. So yeah, it didn't. It almost got there, but it tends to be very resistive and very supportive, like guardrails. So ceiling and floor can be overlapping those zones, but generally your IV walls are the edges of the expected moves. They're not going to be right in the middle of the action. I think there was one other. I'm probably going to build one of these tonight. It just depends on how tired I get. Let me see if I can find it. Okay. Just one more thing I was going to show you guys that I find really helpful for concept. I just have to find it because I did it like a week ago and there's already 100 screenshots in here with it. Oh gosh, where'd it go? Here it is. So this I've showed you before, but if you take the ceiling, the overnight ceiling, and the overnight floor, and you lay it down on the spread monster, so we're pairing data. These are contracts. These are the contracts, the puts. We take the price that we closed at, we take the PML, and then this gives us another layer of information. Now, these are derived differently, but we're pairing the data. So in my mind, I'm kind of saying, user, don't worry about this whole zone or this whole zone. It's beyond the ceiling, beyond the floor, and we rarely go beyond the ceiling or the floor. That said, it can still happen. But when you look at the ceiling and floor as a filter, and you still see volatility here, the IV walls are going to be up in this area. They're not going to be down here where the curves are. And like these flatten out a little, but I would expect the IV wall on this day probably overlap the floor a little because it went flat here. But we're not going to go beyond the ceiling and the floor generally. They're going to start working their way in throughout the day. The zone between the overnight ceiling and floor on this one was $7.45 to $7.58. That's $23. Usually, like, that's a lot. They were expecting a lot of volatility that day. But normally it's about $18 to $20. And then by the end of the day, it's around $7 or $8. Like there's only a few contracts left in play. So picture this later in the day, squeezing down on this picture. Now we're only dealing with a small piece of this window. So for me, it's kind of like putting a filter on it and saying we're really only dealing with these zones for that day. I haven't built one for tomorrow. It takes me like 20 minutes to build this. But that's just one way to picture it in your head when you see one of these and you're looking at this and those levels are agreeing with each other. I think I had a chart where I drew it all next to each other to show how, like a recap, like how it played out. I really was ready for this, but I mean, you guys asked good questions and I didn't have like all this ready. Yeah, I can't find it. But again, pair your data, and if you're using your favorite system, use that too. Pair it together. I was using 50 indicators, not 50, but a bunch when I first started doing fractal trading. And over time, I just was able to let each one go. Because once I started really trusting these levels, it made it a lot easier and a lot less noisy for me to find my way around and make trade decisions. Because if you have less factors to think about, you can make the decision a lot faster. Gosh, I can't find this picture. Maybe it's on the other computer. Sorry. It was just basically a picture of a Thinkorswim chart with all these levels mapped out onto it as well. So it was like three of them going across. I'll post it in the chat later, but I may have already done it last time. Yeah, I think I did it last weekend. Looking for it. But does anybody have any more questions? Because I do want to wrap up. Oh, I found it. Well, this one isn't the spread monster, but this is the same example of using our data, pairing it together. We take the weekly floor, we put it here, the weekly ceiling, and there we go. There's our OMM. We never breached the weekly floor or ceiling that week. The overnight ceiling and floor were falling in here on that particular day. So that was Monday. This is what we did last Sunday as an exercise to get ready. But, pairing your data with your different tools kind of gives you an idea of, where we're going to be at the next day. of course, market does what it wants to do, but I don't think I have the other one. Anyways, let's see. Oh, you're welcome. Thank you guys for coming. We need co-hosts going forward. All right, I'll post the link once I get everything uploaded if anybody wants to review anything. And thank you for everybody who pitched in and shared charts and information. And we'll see you next Sunday. Good luck tomorrow. Good night.
You too. Bye, user. Thanks.